Horlicks Network 18, Mission Poshan, Bhavishya Roshan.
Welcome back. Well, not been the best of year for sugar or for sugar stocks. Prices falling as well as showing up in revenues. The fourth quarter revenues of Balrampur Chini, although revenues were up 21%, there was an EBITDA loss and obviously a net loss as well. We're being joined by Mr. Vivek Saraogi, Managing Director, Balrampur Chini. Good morning, Mr. Saraogi. Is that seasonal or is this going to chase you for a few more quarters, this lower cost of existing inventories?
Good morning, everyone. See, I don't see this, a costing saving me. It's basically, I would like to focus more on the outlook of the industry. So yes, you do have an inventory at a lower price, and prices have moved up from the lowest level. We were, let's say, at below 26 X factory. Now you are closer to 29, half 30. So that is a much better position we are in.
Okay.
Having said that, one is still below cost. Our plea with both the center and state for corrective action is pending, and we are hopeful.
Okay, so you spoke about 29 to 30 where the prices are currently. Mr. Saraogi, good morning. I wanted to ask you a little bit about the global situation as well, because the prices have been down lately because of the global oversupply. How is the situation looking now? Is there a possibility that this glut could be absorbed by the global market? What do you think the outlook is for the next 6 months?
See, India never gets in supplies from global markets. So, if there is a glut globally, we are not affected technically. It impairs our ability to export sugar if prices are low. So that's when, the government comes in and gives some support on the export front. So we've had a 2 million MIQ, that is a export quota announced. There is some subsidy for the farmer announced at 5.5 rupees. Our pending demands or pleas are a buffer stock. I'm hearing of some minimum price. And we are also looking at talking about in the future or next year onwards, one has to forget a figure as cane price. You have to see the sugar price and what is the paying capacity. So that is what we've told the center. That is what we've told the state. And we told the state that you've raised prices this year when there was just no scope. And one has to come back, and do subsidy if cane price is not paid, as in the past.
Yes.
So that's both the pending areas.
No, in the best of times, the state governments have not been realistic in sugarcane pricing. This is an election year and a year when farmers are up in arms. So I can see that the hope for the sugar cess itself has gone into its own tailspin. So, Mr. Saraogi, let's look at the brighter part. Prices have gone up from 26 to 29, you say. What are the chances? What is your best reading and your base case of the next 3 months?
I don't think central government definitely is looking to act. So based on that premise, I don't think prices will come down from here.
Okay.
These 30 levels for UP mills could be maintained. You're asking 3 months. My answer to 3 months is yes.
Okay.
And up in arms on the farmer issue, I'd like to comment that, anybody can be up in arms. State government wants a price. They're free to do it. The payment of that cannot be done by millers.
Sure.
Because there is no recovery out of the sugar price.
So what do you see as...
there is the subsidy, there is 5...
No, I was just asking you, what do you see as the first half of the fiscal look like for your own, sugar business? Also, for the cogen business, what's the outlook like?
See, on the byproducts, we're doing exceedingly well. We built a much higher quantum of ethanol. We are indirectly debottlenecking, and, let's say we used to deliver 8. This year, we should be delivering 9.5 crore liters. Next year, we are hopeful of delivering at least 11 crore liters. So we are moving up there. We are hopeful of an ethanol price revival stroke increase back to the earlier levels from next year. Cogen business, because of excess cane, you have good bagasse quantity. So the cogen business, the quantities should also increase. very well, you know, at least 10% upwards of last year. Quantum of exports. So those two are doing very well. Especially for Balrampur, we, in this surplus year, were not required to sell anything at panic prices since we consume most of the bagasse and molasses generated.
Okay.
Okay, so any chance of being able to come out of the loss situation, sir? I mean, in the next few quarters.
Lata, yes. No, I see. Don't see this as a quarter-to-quarter business.
Okay.
This is not a quarter-to-quarter business.
Sure.
If fundamentally we should be able to come out of it, should state and center understand reality, and which, let me tell you, I'm very, very sure and clear that they are abreast of the reality. Now look for the money, pay for it is what's going on. So I'm very sure that things would improve. Quarters, no. Don't ask me quarter.
Yeah, I agree.
But fundamentally going ahead, we are, you know, we are nearing the darkest hour.
Okay.
And then, you know,
No, but does the dark hour,
hopeful.
will the dark hour take up until next May to end? Because now with the political considerations dominating, will any constructive long-term solution take as long as an ex-government?
See, constructive long-term solution, I don't know. All I know is, you know, see how we see it. If you're talking of linkage, it must happen, it should happen. Now, nobody wants to bell that cat, because when prices are down, it means lowering cane price. When prices are high, it means, you know, getting yourself caught into, you know, future problems.
Yes.
So it's state government wins 1 year. The state and central elections aren't done together. That's a big problem for the industry. You have central elections, you have certain considerations. You have state elections, you have certain considerations. So basically the reality is that indirectly governments have to understand and will understand that you must look for cane price arising out of, which is a part of the sugar price. The paying capacity concept has to play in, which is very well played in Tamil Nadu. Let me tell you, they've even said no FRP, nothing, paying capacity is what the mills will pay, and they provided some 200 crores in their budget.
Sure.
Okay.
So it's not that no state government has shown the way.
Sure.
So apart from all
And
the
when
measures...
you have to pitch in money every time there,
Sure. No, sorry, just before we run out of time, apart from all the measures that we've discussed that the government has done up until now, whether it's, you know, imposing of stock limits, hiking import duty, etc., what else do you think is needed to stabilize sugar prices?
see, I think center would have done its bit if whatever spending is taken up in the next cabinet, etc. The state needs to really step up. See, you want to pay a price, go ahead, do it to the farmer. What industry can pay, industry pays. Balance you bear.
Absolutely.
So that realization will hit.
Yes, one hopes, and anyway, GST collections are improving, so maybe they will have a little more in their kitty as well to understand how much they have to pay and have the ability to pay that. Thank you very much, Mr. Saraogi, for joining us this morning with your perspective on the sugar sector. We have to take a very quick break. Commodity trades lined up with Manisha Gupta in a minute.
Well, it's quite a volatile day on the Louth Street so far, a volatile morning, you'd have to call it. Flat for the markets now, but in the red for all three indices. Manisha Gupta is here to tell us what the commodity space has been up to in the morning. Hi, Manisha.
Thank you for that. Well, we have seen some decline continue for the crude oil prices. The last 2 weeks have closed in negative, and we have started this week slightly on the weaker side as well. It's a third straight day of decline coming in for the crude oil prices, nearly 0.25% down on your screens there. Well, the markets really are tackling with the US record production and record exports as well. And add to that the fears that you will see OPEC and the allies perhaps add to the global supplies as well. But that really would come in only when we see that OPEC meeting kickstart in Vienna on 21st, and 22nd is when we might see some decisions being taken in sense of supplies, in sense of prices, who's adding what and what quotas will be assigned to all of those OPEC members. So until then, it is going to be a very volatile crude oil prices. Today, of course, hasn't been such a great day for the crude bulls there. The strength in US dollar has been hampering the strength in the precious metal space. We have seen a very strong US jobs data that came in on Friday, and it is going to be all about the G7 summit in Canada this week. That is where you will see the currency play come in, and most of the trade related headlines also come in from that summit. So this is what the precious metal space will be watching out for. Gold prices just about holding that 30,600 mark. We have seen $1,300 per ounce in the global markets continue to be a very stiff resistance for this one. In the base metal prices, it really is divided into pockets. We have seen the copper prices continue to gain. It's trading at a one-month highs in the Shanghai market, and that is because of some wage negotiations that have come in the major mines in the world. That is adding premium to those prices. Nickel and zinc are doing well because there is actual shortage in supplies, and the steel demand has been quite on the positive side. So these couple of metals actually have continued to gain up for a third straight week. Very strong buy recommendations coming in for these couple of metals there. For today, though, we have Nirmal Bang come out with its strategies. They have a sell call continuing for the crude oil prices. 4,470 is their target onto that one. They also have a strategy coming in for zinc prices with a buy at targets of around 208 rupees per kg for the day.
Okay, thank you very much for that, Manisha. And now from commodities, we go to fixed income. The Reserve Bank will release its monetary policy on Wednesday afternoon, and all indications are that either a rate hike is coming or maybe a tighter change in stance. Ahead of that big event, I caught up with CNBC TV18's Citizens Monetary Policy Committee to get a sense of what all the MPC will have to parse before it makes its decision. Listen in.
The inflation story is starting to look really dangerous now. Core inflation continues to work upwards. We are coming into the Kharif season, which is principally a rice growing season. And if the 50% plus MSP is announced, that's going to add another maybe, the rice MSP will go up by about 17 to 18%. So that's going to add another impetus. The rupee is weakening, the oil stays up. So all of those add up to, I think, strong inflation challenges.
The other big, of course, element which the Reserve Bank will have to take into consideration would be what's happening on the currency front across emerging market currencies. Sonal, from your perch in Singapore, would that be a compelling reason to give a boost to the rupee, or at least keep it stable, the reasons for a rate hike?
Yeah, Lata, I think from a purely inflation perspective, average headline inflation, excluding the HRA impact in FY19, may still be around 4.5%. So at 6% repo rate, there's still a 1.5 percentage points real rate cushion. But clearly, the global environment has completely changed in the last couple of months, given the increase we've seen in oil prices, along with the stronger dollar, U.S. interest rates moving up, and across emerging markets, we've seen pressures come back on the balance of payment front. So, I think from an inflation targeting perspective itself, the changing global environment clearly means an upside risk to the inflation outlook. But purely from a macro stability perspective, this has become quite important. So we have, of course, seen countries like Turkey, Argentina, even Indonesia, which has delivered a preemptive rate hike, and India, with its twin deficit, also needs to ensure that macro stability remains a priority. So I would say yes, from an external and changing global dynamics perspective. But if you superimpose even the domestic changing growth inflation dynamics, both the things actually point to the same direction, which is that there is a need for the monetary policy cycle to now turn.
You put on the table the fact that there are soft spots in growth, but core inflation, etc., are picking up. So do you think that it makes sense to warn and therefore change stance? But is it too early, you would say, to hike rates?
That's probably the most debatable discussion, that as an inflation targeting central bank, can you really risk falling behind the curve, at least from the eyes of the market's perspective? So if we just look back from April onwards, we have got two inflation prints on which, depending upon which core inflation measure you like, it has gone up between 50 to 70 basis points. You look at oil prices in INR terms have gone up 16%. Now, not fully probably passed on into retail prices as yet. So if you think of these building up of inflation pressures, then in our view, probably it's better for the central bank to start early rather than wait for the August policy. Yes, the big uncertainty is on MSP, which will probably get clarified only after the MPC meets. But at the same time, if the MSP leads to some sudden spot in prices, then in August it might look to be too little, too late, and who knows, there could be pressure on the central bank to act more if they delay the first rate hike. So in that sense, probably it makes sense to start early, given that the inflationary pressures are now quite acute and quite visible.
Inflation trajectory. Sajid, will the Reserve Bank have to, and the MPC, and will all of you have to willy-nilly revise your inflation target upward? The last policy brought down the March forecast, brought down the first half forecast for the current year, and the second half forecast by 10 basis points. Will some of these have to get reversed?
I think they will have to get reversed, all of us are in the process of doing that. I think, and to be fair, there are lots of moving pieces. Food prices have actually not picked up as much as we thought in the summer. There is not enough clarity on the MSPs. Everyone thought 6 months ago oil cannot breach 55 or 60. It's now closer to 80. The dollar has strengthened 5% in the last 6 weeks, so lots of moving parts. I would pay less attention to the inflation forecast in the next 6 or 8 months because there are so many base effects in opposite directions that you get a misleading picture. The next couple of months, inflation picks up, and then in the second half of the year, you get the benefit of the fact that you had the HRA allowance the previous year. For me, the first clean reading is Jan to March 2019. That's rid of all these base effects and HRA and GST impacts. So